Hello, my name is Deeta Saravanan, and today I'm going to talk about a stock that I'm very excited about, Airbnb. I'm here to recommend buying Airbnb shares right now at $165 and holding on to them for 2 to 3 years. Why? Because I believe that the share price will reach $352 within that time frame for a remarkable 113% gain. Airbnb isn't just another player in the market. It's a pioneering company reshaping the way the world travels and experiences hospitality. Airbnb provides property owners or hosts a platform to list their properties for short to medium term rentals. Guests can search, book, and pay for their stays through the platform available on the web and smartphone apps. With 7.7 million active listings from 5 million hosts across 220 countries, Airbnb has truly transformed the travel industry. And with an enterprise value of $97.4 billion, a low debt to equity ratio of 0.34, and impressive sales growth of 27.5% in the past 5 years, this is a company with a solid foundation for future success. Airbnb has several levers to keep growing its revenue now and in the future, from geographic expansion, specifically an increased presence in Germany, Brazil, and Korea, to dynamic pricing tools for hosts and innovative offerings like Airbnb Plus. The company has numerous revenue streams to tap into. And with future developments such as online experience fees and AI-enabled customer service, the company's profits are projected to quickly heighten. When it comes to market dominance, Airbnb is in a league of its own. Even though it is one of the newest players in the travel and hotel industry, it is the most valuable brand in the industry, beating out all online travel agencies and hotels and airlines. Interbrand, a division of Omnicom Group, ranked Airbnb at 46 in the top 100 with brand value of $16 billion. With over 30% share in the vacation rental market and a brand value of $16 billion, it has surpassed traditional players in the industry. And with the co-founder still actively involved, holding 27% of shares and 48% voting control, it's clear that the company's leadership is deeply committed to its success. Now, what makes Airbnb such a compelling investment? Well, for starters, it essentially created this category and owns the lion's share of the market. Sales are still growing in double digits, far outpacing the rest of the hotel industry. Travel and leisure spend globally has not exceeded pre-COVID-19 levels, but Airbnb doubled its sales from 2019 to 2023. And with trends like remote work and social media influencing travel behavior, the company is well positioned for long-term growth. Airbnb competes with its peer online aggregators such as Booking Holdings, Expedia Group, traditional hotel chains like Marriott and Hilton, and independent website operators. Its total addressable market is 1.6 trillion, and the vacation rental market is 87 billion and growing quickly. But actually, hotels have started listing their properties on Airbnb, making the platform even more attractive for guests looking for one place to search and book. And what about Airbnb's competitive advantage? Well, it starts with its strong brand and founder led management. Founder led companies tend to exhibit a true entrepreneurial mindset, fast decision making, strong customer focus, and investment in technology and people for long term. They are also based in Silicon Valley, which gives access to top tech talent in the world, since they have the ability to tie up with other venture backed companies in the area. The point I want to make is that Airbnb grew organically while its competitors grew mostly through acquisition. Add that to its Silicon Valley roots and organic growth strategy, and you have a company with a formidable moat that's hard to breach. When we look at the competitive landscape, Airbnb is in a favorable position. With limited risks from new entrants and competition at a 3 out of 5, coupled with strong bargaining power with suppliers and limited threat of substitutes at a 4 out of 5, the company is in an overall well-balanced position. Now let's talk AI. Airbnb is at the forefront of using artificial intelligence and machine learning in the travel industry and is already leveraging this new technology to improve its core operations, revenue generation, and customer experience. Its current uses include a predictive search to boost booking completion, dynamic pricing to optimize revenue, and customer profiling to prevent fraud and reduce disputes. Its future uses include customer service AI to speed up response, a review summary where requests can get a summary for reviews, saving time, and faster listing for hosts using tools like image to text AI to autofill description and amenities. Now, looking at the numbers, you can see that Airbnb is growing rapidly. Revenue went up from $6 billion in 2021 to $10 billion in 2023. That's 60% growth in 2 years without increasing debt. Net income improved from negative to 4.8 billion, partly benefiting from carry forward operating loss for tax benefit. The company's assets and cash flows are growing, debt is flat, and liabilities are growing at a slower rate than assets. And the company still has 6 billion in operating loss carry forward asset and innovation tax credits of 0.7 billion, which will be used to offset future income and reduce tax liability. For valuation, I'm using a discounted cash flow model. For the next 5 years, I projected revenue and cash flow based on the past 5-year trend, but with lowered growth to account for company size. NPV of the first 5-year cash flows is 24 billion. From year 6, it will continue to grow cash flow at 6% and NPV of terminal value will be 202 billion. So I arrive at a total NPV of 227 billion. Based on 647 million shares outstanding, fair value of share price works out to $351 per share. Airbnb is valued at an EV to net income of 25, and its competitors have a higher ratio of EV to net income. So Airbnb is growing much faster than its competitors and deserves premium valuation. Base bull and bear cases based on the discounted cash flow valuation, the fair value of Airbnb is $351. The market is undervaluing its shares significantly. As Airbnb proves its sales growth and earnings over the next few quarters, investors will bid up shares to its fair value of $351 in base case. The company has already announced a $6 billion share buyback and will continue to buy back as it has strong cash flows and low capital needs. If Airbnb's new products and international growth accelerates further in a strong global economy with lower interest rates, in 2 years, the stock could reach $500, giving 200% appreciation from current levels. In the worst case, the stock will still trade at $250 if growth slows dramatically as there is no significant debt. Regarding competition, Facebook and Google are both offering competing services that pose a risk, but customers love and trust the Airbnb brand. Also, China-based OTAs and super apps like WeChat could still offer competition in Asia. Government regulation of the rental market is the biggest risk for the company right now, but Airbnb has been doing a great job navigating this very well and is well equipped to manage the risks. Finally, market risks such as recession and high interest rates could lower travel demand and supply. And finally, Airbnb scores really well in ESG metrics. They will be carbon neutral by 2030, and the whole Airbnb model reduced demand for new hotels and saved land and material. The company allows everyone to work and live anywhere, and this has significantly reduced emission and traffic on the roads, as most of its 7,000 employees work remotely. Additionally, 49% of its employees are women, and the company has 2 women on the board as well. So these images give you more insight on the company. On the left are some pictures of unique vacation rentals listed on Airbnb. Guests love the Airbnb brand and enjoy the experience of staying in a home away from home. And the image to the right is a simple schematic of how the Airbnb platform works, how they facilitate hosts to list and guests to search, book, and pay for the stay and communicate with the hosts. That is the end of my pitch, and thank you so much for your time and listening.